What's up, everybody? According to Washington Post analysis, home prices have risen 54% since 2019, leading some economists to speculating about a possible housing bubble that could burst. So far, we have not experienced a crash like back in 2008. However, in recent weeks, housing experts are starting to speculate that the laws of supply and demand may be finally catching up to current market conditions. In fact, some are now forecasting a further correction or even possibly a crash. When inventory rises faster than demand, prices have to adjust eventually. Realtor.com senior economic analyst Hannah Jones said, increasing inventory levels are a sign that the market is starting to balance out. So today, we'll take a look at an article by Michelle Lerner for Yahoo Finance titled, When Will the Housing Market Crash Again? As well as an article by Elena Botrus for Fortune titled, We're Passing Through the Worst Housing Affordability Crisis Ever Seen, former housing secretary says, and it isn't going to fix itself, to see what our imminent future holds. So let's dive right in. We're just coming through the worst housing affordability crisis we've ever seen in this country. Sean Donovan, former U.S. Secretary of Housing and Urban Development in the Obama era and Chief Executive of housing nonprofit Enterprise Community Partners, said in an interview with CNBC. We had 18% year-over-year increase in rents, home prices rising at levels we've never seen. So we are seeing some leveling off, but it's at a level that's well beyond what folks could afford. He continued, this isn't going to just turn around by itself. We have too little housing in this country, and we've got to build more. Donovan later put the housing shortage between 5 and 7 million homes, but estimates vary. Okay, granted, we need more inventory to balance out the supply and demand equation, and therefore bring home prices down and make housing more affordable, at least in some markets. As we all know, real estate is very localized, and what's happening in Florida and Texas may be very different than what's happening in the Northeast or the Midwest. But we'll get to more of that later. But it isn't just about building more homes to create more inventory. Housing inventory can be created by a surge in unemployment, where people are losing their jobs, can't afford to pay their mortgage, and therefore have to sell. Or if rates stay so high that nobody can afford to buy a house, houses will just sit there, therefore accumulating days on market, creating more inventory, because buyers simply don't want to buy those houses or they can't afford them. Or if rates go down to 6% or even under, you may see a lot of sellers putting their existing homes on the market, therefore easing the competition and reducing home prices. That is, unless a reduced rate then brings in a surge of buyers, then the dynamic may still remain competitive. Some people think the housing market will crash again because the volume of sales has been sluggish, said Rick Sharga, founder and CEO of CJ Patrick Company, which provides market intelligence and consulting for real estate and mortgage companies. Right now, the amount of home sales is still low. He said that about 4 million existing home sales was sold in 2023, the lowest number of sales in 25 years, and sales will likely remain weak throughout 2024 and into 2025. But that doesn't mean current homeowners will rush to sell their homes at a 20 to 30% discount, which is what a lot of the doom and gloom prognosticators are predicting, Sharga said. There will continue to be demographically driven demand. The country has the largest number of young adults between the ages of 25 to 34 in its history. Demand, while somewhat weakened, still outpaces supply, which has led to home prices continuing to rise, despite today's higher mortgage rates. Lerner writes that although housing inventory has increased over 30% from a year ago, it still only represents about a 3-month housing supply, which is roughly half of what it was back in the market of 2019. In a normal market balance between buyers and sellers, we would have a 6-month supply of homes, Sharga said. In the years leading up to the housing crash, there was a massive oversupply of homes for sale, nearly a 13-month supply. During the last housing market crash, home prices dropped over 15% between 2007 and 2008, according to the S&P Case-Shiller Home Price Indices, and things only got worse from there. Most of the experts are saying that the factors that led up to that housing market crash are not present today. Literally everything is different about today's housing market dynamics than the conditions that led to the housing crisis, Sharga said. That includes a limited supply of homes, high levels of home equity, economic strength, and the strict guidelines mortgage borrowers must meet. And Orphe Divangi, a senior economist at Zillow, said, the unemployment rate is a low 4%. Home equity is still near record highs in most housing markets. Most homeowners have extremely unsustainably low monthly payments due to record low pandemic mortgage rates. As a result, mortgage delinquency and distressed sales remain low. In 2024, I expect we'll see home appreciation take a step back but not plummet. So which is it? Will the housing market become more affordable in the near future? Because right now, home prices are going up in most markets. In May, the median existing home sale price was $419,300, the highest price ever recorded, according to the National Association of Realtors. Annie Walden, Vice President of Enterprise Research Strategy at ICE Mortgage Technology, said most baseline forecasts of the housing market do not predict a decline in national home prices. It's more for a neutral housing market for a couple of years to help this kind of rebalance, he said. There are going to be some markets that come down, but nationally expected to go more lateral than down, Walden said. If you ask Zillow, they expect home prices will fall 1.2% between May of this year and May of next year, while Moody's Analytics expects them to rise 0.4%. And Fannie Mae expects home prices next year to be up 1.5%. Then again, you've got Dan Netkovsky, co-founder and CEO of New Homes Mate, a marketplace for new construction homes, who sees a price collapse within the realm of possibility, especially in markets where real estate investors have scooped up a lot of properties. If something pushes that over the edge, the consequences could be severe, said Netkovsky in a statement. As far as foreclosures, the experts don't expect a huge wave of foreclosures in 2024. Foreclosure activity continues to lag behind pre-pandemic levels and is still at about 70% of 2019 numbers, says Sharga. This is mostly due to homeowners possessing an unprecedented amount of home equity. One thing a lot of these experts don't really talk about is the rise in costs associated with owning a house, like property taxes and home insurance, both of which keep going up. If these costs become unsustainable to the homeowner, they may decide to sell their home if they can't afford to make their payments. Sean Donovan pointed to a report from Harvard University's Joint Center for Housing Studies, which found that almost 1 in 4 homeowners were stretched worryingly thin. If a significant number of properties were to hit the market simply because homeowners could no longer afford to stay in their home, that could bring home prices down and weaken the housing market. Sharga suggests that consumers watch their local market conditions, such as whether the population and the job markets is growing or declining, along with wages and home sales, and of course, home prices. While a national housing crash remains very unlikely, every market is unique, and some are likely to see prices go down even as the national numbers are going up. Probably not enough to designate it as a crash, but enough to make a difference for some homeowners, Sharga said. There are markets, like in the pandemic boom towns in Texas and Florida, where home prices have fallen considerably from their peak. A recent Redfin analysis shows that the housing markets in Western Florida are cooling faster than any other place in the country, as natural disasters intensify and new construction soars. And Realtor.com reports that in 6 of the 15 Florida markets that fall into the 150 largest metros in the United States, prices are already down year over year. And in Texas, according to Redfin's latest housing market update, for the 4 weeks ending June 30th, the metros with the biggest year-over-year median home sale decrease are Austin, Texas, down 2.1%, Dallas, Texas, down 1.5%, and San Antonio, down 0.2%. That being said, nationally, the median sale price is at an all-time high, up 4.9% year over year, and the median asking price is up 6.1% year over year, the biggest increase since October of 2022. The metros with the biggest year-over-year median sale price increases are Anaheim, California, up 14.7%, Newark, New Jersey, up 13.5%, Nassau County, New York, up 12.6%, New Brunswick, New Jersey, up 11.7%, and Fort Lauderdale, Florida, up 11.1%. So you can see Florida is also experiencing a mixed market. New listings are up 9.9%, the biggest increase in 2 months, and active listings are up 17.5% year over year. The metros with the biggest increase in new listings are San Jose, California, up 49.2%, Seattle, up 28.7%, Miami, up 24.8%, Boston, up 24.3%, and Montgomery County, Pennsylvania, up 22.2%. The metros with the biggest decrease year over year in new listings are Atlanta, down 7.7%, and Detroit, down 0.4%. 41.6% of the homes sold in the first 2 weeks, down from 47% a year ago. The median days on the market is 32 days, up 5 days from a year ago. 32.3% of the homes sold above the list price, down from 36% a year ago. And 6.9% of the homes had a price drop, up 2.1 points from a year ago, and the highest level on record. The bottom line is, if you want to know what's happening in your local market, pay attention to the job market, the reports that come out, to obviously home sales and home prices. Where I am here in the DC area, we are still experiencing a mixed market, where some houses are going with multiple offers and going way above asking, and other homes are sitting week after week with price reductions. It really depends on how the seller priced it and the condition the house is in. It can be very confusing for both buyers and sellers. And add that to the new rules regarding buyer agency, which do start August 17th, and I think our housing market is definitely going to experience some sort of shift. I am just not convinced that it's going to work out in the buyer's favor, which was the intention of that NAR settlement. Last week, we spoke about Krooth, chief market strategist of the Technical Traders, who said the distress of the commercial real estate sector could impact residential real estate and cause a crash sooner than you think. People don't realize real estate is primed and ready for another major leg down, he said. They're buying right now because there's been a pullback, but the reality is that I think we're going to see this collapse. If you missed it, definitely check that out next. Thanks for watching. I do appreciate it. Bye!